Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Shawn Cruz. He's the manager of trader services over at TD Ameritrade with your midday update. Shawn, it's great to have you with me as always. And it seems as if tech stocks continue to lead the way here this week.
Yeah, and you're starting to see a little bit of a divergence in some of the major indices today. So I think one, if you look at the Dow Jones or the S&P 500, kind of getting held back a little bit by some of those bigger retailer names, but we're seeing some strength out of a lot of those growth tech type stocks, and that's why you're seeing the Nasdaq outperform some of the other indices today.
All right, let's take a look at the VIX here, because the obvious question is, with the outperformance that we've seen within the tech group, you have to start to ask yourself, how do I hedge myself against these positions that you might have on if you have the Apples and the Microsofts and the remainder of the FANG stocks. Granted, the VIX is a hedge towards the S&P. You can also look at the context of NDX as well.
You could, and so if you look at it as very similar VIX type measure on NDX, that's a little bit higher, but it's still at very low levels relative to where we're used to seeing it. So if you look at a chart of that, it's not going to look much different than the VIX here. And we talked about this last time I was on, Jill, where you're starting to see a very similar pattern where you see the VIX or volatility really get damped down, but you don't want to let it catch you sleeping, because you do get these pretty big bounces higher that can seemingly come out of nowhere, and it's usually around trade. And so this week we've seen a little bit, I think, of some cracks in the phase one trade deal going all the way through. What I think that we're cautioning our clients is that, look, this is phase one of what's supposed to be a three-phase deal process, and if they're already having trouble getting through phase one, which should be the low-hanging fruit to get through, then I don't think that bodes well for phase two or three. So that's something where you don't want to get lulled to sleep here. But when you see the VIX this low, what it tells you is that hedging costs are also very low. So if you're looking at where we're seeing markets right now, up at all-time highs, and you don't maybe want to start going out there and selling some of those names, taking profits, but you do want to find a way to maybe protect yourself if there is some sort of a sell-off, using some sort of an option strategy, even if it's just something as simple as going out there and buying puts against your portfolio, is something you can look at here. And with the VIX this low, it's telling you the cost to go out there and buy those puts is going to be relatively cheap from where we're used to seeing it.
All right, now the phases of the trade deal, we've already touched on that. Demand in housing seems to still be a positive area in the market.
It is, and we're actually seeing some of the numbers today, even though the housing starts number came in a little below what the expectation was, it's still at 12-year highs. So some of the best numbers we've seen since the housing crisis. And if you look at permits, that was incredibly strong, coming in around 888,000 permits. So that lets you know that there's probably some strength here in the future for some of these housing names. And it's interesting, if you look at some of the names that are selling off today, Home Depot and Lowe's, on some of, I'd say, some weak guidance, weaker than what the street was expecting, that could present an opportunity if we do see continued strength in the housing market. And you're actually seeing analysts come out, even after Home Depot came out and guided a little lower than what the street wanted. Analysts are coming out there and reiterating their buy recommendations. They're not coming out there cutting price targets, saying maybe go to hold or sell in these names. So analysts aren't really as concerned about this as what the market's showing you today. So this could present some sort of a buying opportunity in some of these names if you're looking for something to pick up on weakness.
All right, let's wrap it up with oil here. This just cannot get above its 200-day. There's just too much supply in the market. It's that easy.
That is, and the one thing that can really offset some of those builds in supply, I think, would be coming from the demand side. So if we can get a pretty convincing phase one deal through, and we start to get the feel that maybe phase two is going to be able to go off relatively easy, I think that's one thing that could allow oil to burst through that ceiling that it looks like we're having trouble breaking above. But like I said, you're going to need to find some good reason to feel that there's going to be enough demand coming online, which would probably be some sort of optimism around a very positive outlook for these trade negotiations to offset that build in supply. So I think that's going to be something to watch here moving forward.
I feel like I have a hard time understanding the correlation there, and this is a narrative that has been in the financial media so much is predicated on the trade deal, but how does that impact demand if there?
I think the feeling there is that, look, a lot of uncertainty around these trade negotiations has been something that's been an overhang on business investment decisions. It's been an overhang on international trade and global growth. So if we can finally get a resolution and get a feel that we're going to get through phase 2 and 3 sometime soon, I think that everyone will say, look, we might get this growth coming back online. Businesses are going to start feeling better about investing. A lot of this uncertainty is going to come off the table, and now you're going to start pricing in a little bit more demand on the oil side, and it's just going to eat up a lot of that supply that's building right now. But absent that expectation for a pickup in demand, presumably because we feel better about the growth outlook, this supply is going to continue to be something that keeps a cap on how high oil prices can go.
All right, excellent points. Thanks so much for explaining that to us and for joining me at MarketSite. And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.